Hello, hello. How's everyone doing? Good afternoon, good afternoon. Yeah, long time no see. Yeah, we were off for 2 weeks, right? So 2 weeks looks to be a very long time when we get habitual to meeting every week for 5 years. Yeah, I was off. You guys know, I mean, I already mentioned that I'll not be able to host the meeting for next 2 weeks. One was personal commitment, the other one was I wanted to attend Woodstock for Capitalists, which is Berkshire Hathaway shareholder meeting. So last week I was over there. So I do have some things to talk about the shareholder meeting as well. What did you guys do over the last 2 weeks? Anything new? Anything exciting? Markets did okay. Markets didn't kill us, right? Sell, Ramka says sell on the news. Matasha, good morning. Vin says hi, hello, Vin. Aditya, good to see you back. Very good morning to you. Ramka, sell on the news. I don't know. The news was the president says we should go and buy the stock. Last time when he said that, market did pretty well. So I don't know whether we should buy or sell the news. I mean, generally it happens. Buy the rumor, sell the news. But we'll see, we'll see. Can you deep dive Zoom company? Um, I think the specifics, because I've not been tracking Zoom anymore. I mean, I used to track it 2021, 2022. Then they could not just go beyond the webinar meetings, right? So my whole thesis around Zoom was if it could become a platform for video content, but that didn't happen. So I stopped tracking Zoom. But if there is a specific question, I mean, if this is a part of your holding, then sure, maybe next time I'll do it. But you have to give me two things: what's the market cap and who's the CEO of Zoom is. But I do recall Zoom was a profitable company when it came IPO. It was already GAAP profitable, so and a good cash flowing company. Just that the growth is not there. So that I haven't looked at in Zoom in past many years. But we will look at some earnings. I mean, that's on my agenda today to look at earnings. Aditya, really looking forward to hear about experience at Berkshire. Oh, it was great. I mean, and yeah, we will talk about it. I do have a. I'll start the discussion with talking about Berkshire and some of the quotes from Berkshire Hathaway. Skype dead. Yeah, I think Microsoft had decided to sunset Skype. What they bought it for, what, $9 billion or $4 billion many, many years ago, and finally just couldn't do anything and decided to sunset Skype. It was a good product. I remember using Skype before there was Zoom or anything else. Skype was a way to talk to friends and frankly, a lot of customers, overseas customers, and without paying the ridiculous amount of the phone company charges. So Jose says, watch my Bitcoin go up. Yeah, absolutely. I mean, Bitcoin is back into six-figure numbers. So, and not just Bitcoin, I think the Ethereum is even much higher because of the recent upgrade, Pectra upgrade that they did. Uh, didn't do anything for a year. Well, maybe let's pull up. Let's pull up this thing. I always have to refresh it whenever you're looking at a crypto. Always press a refresh button. You never know what could happen in a few minutes or an hour. If you really look at Ethereum, it's up like 35% in 7 days, right? It's all because of course, there's a general sentiment around deregulation on crypto, but specific to Ethereum, the new upgrade, the Pactra upgrade, went pretty smooth. I mean, most of us wouldn't even realize that the upgrade had happened, but that does unlock a lot of execution speed on layer one itself, trying to make layer one of Ethereum faster so that the value capture happens on layer 1 are not taken away by the L2s. So which was I mean, that's something that Ethereum kind of lost the whole plot. They wanted to, they have a different scaling solution that they have been using. And now they're pivoting back to, no, let's focus everything on the layer 1 itself. So, didn't do anything. If you look at Ethereum, let's pull up the chart. And didn't do anything for a year almost. I mean, it is still below where it started the year, but if you look at starting of the year, it's been just going down. And then what, in 3 days, from 1800 to almost like 30% up. So a lot of, we're getting back to those good old days, or maybe call it as scary days, wherein a lot of these risk assets are starting to pump up. A lot of altcoins are starting to turn up, but I think the Bitcoin dominance is still higher. That's one thing which the community have been talking about, is by this time you should see altcoins already getting pumped up, but it didn't happen, right? Overall, from a dominance perspective, maybe it might have a chart on Bitcoin dominance. Does anyone know if we have a Bitcoin dominance chart? Not here, maybe, but we can find it somewhere else. But Bitcoin dominance is still, I think it's been just up on the right side. Hopefully now with other coins pumping up, like Solana is now 172, maybe the dominance will start to come down. Wow, the Doge of everything else, it is Dogecoin is now up. That too is up 30%. Lido is 34%. What else? Solana is up 16% for a week. Cardano 14%. Tron is 6%. Ravi is asking, can I invest in ETH? So there are two ways. Now you got ETFs on Ethereum, as well as, of course, you can take a direct exposure to Ethereum by buying Ethereum digital asset on any of the crypto exchanges. So both ways you can do it, either on your regular brokerage account or buy just as on a crypto exchange account, you just buy Ethereum. It's a misnomer to call it as a physical Ethereum, but it's equivalent to buying a physical gold. You can actually get an Ethereum itself. Do you have a theory why Bitcoin has a higher adoption as compared to other crypto? If you really look at it, all the institutional money that you're looking at, is majority of it is coming in the Bitcoin, right? And that is why we are seeing that it's got a more high adoption over that side. I do know even for Solana, I think there are a few issuers that have started to file ETFs against other altcoins also. There's an ETF file for Solana. There's an ETF file, application being submitted to SEC for, I guess, even Dogecoin, right? But none of them have. I don't think Solana has been approved yet. Those have not been approved. Even if those have been approved, let's say Ethereum ETF has been approved, right? But you don't see much of an institutional adoption on Ethereum just yet, because the value proposition is not clear. What do you want to invest in Ethereum for? Anyone wants to talk about that? Why would you want an institutional investor? What's the value proposition that you want to give institutional investor on? Why you want to invest in it? For it's very easy to explain to institutional investors on the thesis behind Bitcoin, right? It's a gold, it's a digital gold. It's just that it is better than gold. Right? It has all the properties that gold will have. Plus, it has more stuff. And investing in gold, people have been doing it for 5,000 years. You don't have to reinvent the wheel. On Ethereum side, what's the value proposition? Especially when you don't have a yield-bearing ETF yet, right? Institutional investors, they would love yield. But currently, those ETFs, I mean, the moment you talk of yield, it gets into a different conversations with SEC, right? So other than that, it, I understand what Ethereum does and everything, right? But for those who are normies that hold trillions of dollars of wealth, trying to explain the value proposition of Ethereum is a tricky game. And that is why we're seeing more adoption of institution money on the Bitcoin side, not on the Ethereum side yet. If Ethereum starts to come up with those yield, the ETH start to pay yield, that makes sense. Then you can explain to the fund managers and say, you know what, you got a bond, you're investing in bond, maybe replace that with the yield coming from Ethereum. So the use cases that Ethereum has could be on the DeFi, decentralized finance, how you run your transactions, make it cheaper, etc. But what does a pension fund got to do with all that? Pension fund is looking for either the increase in value or give me a constant yield to run my expenses. Bitcoin itself has cornered the market on the hard asset, like digitally hard asset. Ethereum is sometimes, they talk about that it's a better money, or no, it's an oil, or yeah, it's a medium of transaction, so it's a little more segregated. I'm still bullish on both. I mean, of course, Ethereum has got its lot more competitors, but that's where the value proposition is not that exact, that clear. What are best invest in crypto? Whatever works for you. And depends on what kind of investor you are. People have made money in Dogecoin also. I'm not the guy who could do it. And people have lost money in Bitcoin also because they just couldn't go through the volatility. Remember, Bitcoin also has gone through 30%, 40% down. In recent times, we've lived through the volatility of 70%, 80%. So if that is the case and you're okay with living through the volatility, I think still the Bitcoin has got the longest runway and the value proposition. Others, Ethereum is also good, but my only concern is someone else could come and replace, because a lot of other projects are competing with the same value proposition as Ethereum. Ethereum is the first one to do it, but it is not the only one to do it. But Bitcoin has clearly established itself as a value prop that no other altcoin can claim to have. Of course, there are other risks for a Bitcoin that we should be aware of. What happens when the rewards become very less? How are we going to secure the network if the transactions don't pick up? Right? The fact that there are 3 big mining pools that basically, most of the hash power is among those 3. What happens on that cases, right? So those are the risks which are specific to Bitcoin, but from a value proposition perspective, I think Bitcoin has separated itself against any of the other altcoins. That's the risk for all alts. Yeah, all are trying to do almost similar thing, faster, cheaper way, right? And if you recall in 2021, even I think earlier, there are so many altcoins will come up, and then when I used to study, I say, okay, now they have come up with a new blockchain, new L1. Very soon they will come up with an equivalent of a DEX. Then you will see a DEX will come up. Then we'll see a game will come up. And then you'll see an NFT will come up. It was a playbook was absolutely being copied across all alts. Everyone knew what's how do you have to do your GTM activity and what are the things that you need to bring up. Right? It was just a copycat. Everyone will start with a L1, then NFT, then DEX, and then have a game, because Axie Infinity made a lot of people millionaires, and then everyone wanted to start a game, games also. So very standard playbook. I have seen this, across many alts. So what's the value prop? I think Ethereum has a value prop right now that it is the biggest ecosystem. The most of the value locked, TVL on on-chain value locked in various protocols, and it's been around for the longest. And there is a Lindy effect that if something has been around for longest, probably it will continue to survive. So Aditya says, how come Bitcoin doesn't have competition? Some could repeat the same formula. It's just adoption. So there is so when it comes to these, adoption metrics, there is a time when you cross a threshold, right? If the adoption is less, anyone else could have come up with even better formula, better asset, and could have garnered the market. It's just that now the adoption is there. It is very difficult for others to come and replace it. I mean, there have been a better social media companies that could have started after Facebook, but then who wants to move away? That's all it's stuff. It's just that the adoption is there. There are more rarer metals in a periodic table than gold. Right? We say gold is valuable because gold is rare. There are even rarer metals, but the adoption is not there. So when it comes to anything as a store of value, it's not just you and I. If more people, we need to have more people who also consider it as a store of value. Only then it'll become a store of value. It doesn't matter how unique the stuff could be. But every snowflake is unique in itself. Right? But we don't consider that as valuable. So it's the fact that it has all the properties like gold, plus the adoption curve of Bitcoin or where it is, I think that is making it very difficult to replace. Could we collectively as a society could run behind some other coin later on? Maybe. I mean, it's been 15 years since, or maybe 16 now, since Bitcoin white paper came out. Could someone else come up with a completely different and basically poke holes in Bitcoin and say, hey, this is why the other stuff is way better and everyone should adopt it? Maybe. Who knows the future? So anyway, so that's on the, what else before we jump on to our session today? All right. How about Avalanche and Chainlink? So Avalanche is almost same thing as like consider Ethereum and another, Solana, all that on the same competition. Chainlink is a little different. Chainlink will prosper if we have the crypto economy prosper, right? Because it is, I mean, its origin is or to provide the to basically connect the blockchain world and the real world. How do you get a data from your real world to conduct the transactions that on your blockchain world, right? Let's say if you have a betting system on blockchain, and you and I bet on a weather on Bay Area on a particular day, right? How do we ensure, without depending on a trusted third party, that who won in terms of what's the weather at that particular time? So Chainlink allows you to get the data without trust from the real world, bring that to the blockchain world. It's a connector. So if we see more and more commerce being conducted on crypto or on blockchain-based economy, then I do see there will be a need for these oracles who will become a source of truth for various data. They will have a place for it. More recently means 2-3 years ago, Chainlink also started to add additional functionality of transfer of value between one blockchain to another. Right? Blockchains don't talk to each other. Right? Our internet computers talk to each other. Blockchains do not. They all operate on a different protocols. So how do you transfer value from one to another? CCIP is a protocol that Chainlink uses. If you have an asset on one blockchain, you want to move it to another blockchain, either you can use your smart contracts to do it, but then they are also susceptible to a lot of hacks, bridges, etc. So Chainlink also allows you to do that. So the value on the Chainlink, again, that's my opinion, is you will see a lot more value in a Chainlink if the blockchain based economy itself start to pick up. Otherwise, it's a good tech project. Again, I think we are way early in this game. Probably a few decades it might take, and that's why you need to have lots and lots of patience. Alrighty, okay, so let's get going with our session, or anything else. Is there anyone who's joining here for the first time? Any first timers? All right. Okay, Ravi is for the first time. Oh, Vikas says first time. Matashia, Vinay. All right, welcome everyone. Glad to have you guys here. We meet every Saturday, unless if I'm tied up in something else, like I was for last 2 weeks. But almost every Saturday we will meet here at 10 a.m. Pacific time, just to talk anything and everything under the sun when it comes to investing, right? And it's all about DIY investing. And so I'm not a professional trader, or I don't work for any investment firm or a hedge fund or a registered investment advisor. I'm just a retail small DIY investor, and happen to love talking about investing. So there we are, been going it for 5 years. Hopefully we'll continue it for another few decades, as long as my voice supports me. All right, so welcome. So today what I want to talk about. So as I mentioned earlier, I was attending Berkshire Hathaway shareholder meeting the last Saturday. So want to give you, some quick updates from there, share my experience with you guys. And of course, we'll look at the macro side, what has happened in the market, any newsworthy items. And then this has been an earnings season, right? So lots and lots of earnings. I have a lot more than I've put in the chart. So if you have an appetite, you want to discuss, a few specific ones. There are a few that I would want to discuss because those stocks are not being talked about on CNBC or Bloomberg or Yahoo Finance, whatever is your preferred media of consumption for financial news. So I do want to bring up those stocks. Plus, then if we want to talk about some meme and retail hot stocks, yeah, we can talk about that as well. Like Shri says, TMDX exploded after earnings. It was like more than 40% short. So there's a short squeeze going on in TMDX. Yeah. Yeah, so that's all on our agenda. Okay. All right, but before I begin, I have to show you this screen that I'm not a financial advisor. Anything I say or show you here, please do not consider it as a financial advice. Don't trade based on whatever you hear in this meeting. You gotta do your own due diligence and maybe talk to professional, right? Really, don't talk to professional. You can do much better than the professionals do. Talk to yourself. Use your own judgment. Professionals don't do any better. Okay, so some reflections from Woodstock of Capitalist. This was my first time that I had gone to attend the meeting in person. I was the live stream for a few years, but I was thinking, Warren is already 95 and Charlie not been around, which was a source of inspiration and happiness for him. I really wanted to go and attend it in person before Warren disappears. So I did it. So this year I went and attended the Berkshire Hathaway meeting in person, and it's an amazing experience. I mean, especially if you if you are kind of an investor, and I mean, I've been inspired by readings of Warren Buffett. I followed him very, very late in my life, but it's never too late. So I really wanted to go and it's like for me going and paying my obeisance to the god of investing community. So I went there. This was the 60th annual meeting, and you know, almost there were, I think, 40,000 plus people in the hall. So they opened the center. It is being conducted in a big stadium. Okay, so they opened the center. Yeah, this is a stadium. So they opened the doors open at 7 a.m. and I think people start to line up at like 3 a.m. to be the first one to get in the door and get the best seats. I wasn't that lucky. In fact, my flight was delayed. I reached my hotel at around 1:45 a.m. And then I slept around 2:15, put an alarm for 5:30, get some, catch up on a couple of hours of sleep. My idea was go there by 6:30 and then start to line up. So by the time we reached there, it was already 6:30, and we started to line up and figure out where the queue goes. Didn't want to break, didn't want to do the non-civic work of breaking into the queue. So we started walking. It was almost, if not a mile, at least three-fourths of a mile long queue. And then it was fun. You go and we stood in a queue, started talking to people. And I think that's the first time that I've stood in a queue that is so long and didn't feel bad about it. And then while I was chatting with the people, and I was the newcomer, I was the newbie, and there were folks who have been around earlier also. And then they told me, this is the only one queue. There are 4 such queues in a different direction. I'm like, what? So yeah, so that's what. Then we went in the hall, and there was a scramble to find the seat, and it was like full. But luckily we were able to find the seat, and then we didn't move once we got the seat. Went through the whole Q&A, and then we moved out and then came back for AGM. So that was one. It's amazing experience to see it in person, right? I've always watched the, like I said, live stream doesn't give you the same feeling as if attending in person. The better thing was there are a lot of other meetings that happen in Omaha around this main conference event. I did not know. I mean, I knew about one meeting, but I did not know that the meeting starts to happen on Thursday itself. So maybe next time I'll probably go, land there on Wednesday night, attend meetings on Thursdays and Fridays, then attend this big conference on Saturday, and then there are meetings on Sunday as well. So better part was going to another meetups, talking to other investors. We did, after this main event, we went for PIP, the Investors Podcast. They hosted a meetup, so we went and talked to a lot of, folks, investors. A lot of them are just like us. They're doing their regular job, and then they want to, invest on the side, or trying to, make enough through investing to kick their jobs and be financially independent. And then there were folks who were portfolio managers, who were equity research analysts, right? I've met a lot of techie folks as well. So people from all walks of life, and that's the fun when you go and meet all those investors. You realize, hey, I'm not the only one who's crazy enough to invest, right? and then on Sunday there's another company called Markel, and Markel is also known as a mini Berkshire because they have a similar business model. I'm a shareholder of Markel as well, and they have their shareholder meeting, which is on Sunday, the next day after the Berkshire. And yeah, you go into that meeting, that's fine. More fun was outside of the meeting hall. I think around 2,000 or 3,000 people showed up for Markel, but there was so much fun outside of a meeting hall. Again, going and meeting various people, met some hedge fund managers, met some So the portfolio guy connected with some of the equity research analysts because I'm not from a financial services background. So if I need some help on running some DCF models, someone had told me, hey, reach out to me if you want me to run some numbers, etc. on your companies. Also, it was a good way to validate some of your investing thesis. So I went and talked to a few people, right? Have you heard about this company? What do you think about this? I met a couple of doctors and I talked to them. I'm like, hey, can we connect on a LinkedIn? And the doctors said, we don't use LinkedIn. I'm like, how about, do you guys use Doximity? Say, yeah, we all are on Doximity, right? So that's a boots on the ground research that makes me happy as a Doximity shareholder. So yeah, it was fun talking to various investors. And I think that was much bigger takeaway for me was bounce off some ideas, make connections, reach out to people. And they're all common people, right? I did not come across anyone who was like handed over wealth and say, I'm managing my family dynasty or, a big, millions of dollars of funds given to in that I've inherited. Most of the folks were just, hey, trying to make, work my asses off for either in your own business or in your job and want to invest so that we can be more independent. So that's the community that I want to associate with, and it was fun. I really enjoyed it. And at some point of that, I thought there were people I met who came from Australia, Dubai, Germany, Italy, lots of people from China, Taiwan, and Hong Kong. And here we are. I'm in the US. I never came for so many years. I never bothered to just hop on a plane and go and attend this. Whereas, I'm seeing people coming from all over the world. So it was fun. That's great. So that's my quick update into how I felt in Omaha attending that meeting. I think if you really want to be in DIY for a DIY investor, yeah, we should go. It's an experience. I'm not sure next year how it will be, but outside of Berkshire Hathaway, the other stuff was a lot more interesting as well. Right? Sounds like you would go back again. Yes, I would go back, and probably I'll go back, so that I can attend the meetings on Thursdays and Fridays. I'll probably spend more time in Omaha. So that's all about me, but let's also hear what the Oracle of Omaha had to say. If you're not aware, the way the meetings happen is Warren Buffett will come on the stage along with, it used to be Charlie Munger, and then it used to be only these two. But then he also started inviting its second in command, Greg Abel and Ajit Jain, to come and sit on a stage with him. And the meetings will start with people asking questions, right? And there are so questions are being asked in two ways. One is that you can submit your questions online to Becky Quick of CNBC, and then she will filter out and ask the questions. And then there are various question booths in the this stadium, and then you can go to question booth and stand there, and if this is your turn, they'll ask you a question. So what Warren does is one question Becky will ask, then he'll say, okay, booth number 1, booth number 2. So one coming from online and one being asked in person. I don't think you can see it, but let me just see if I can just point it out. You see this, where do we have? Oh, come on. I moved to this Google World. So where's no. Anyway, so you see this small blue, this is like one of the question booths. Anyway, so let me go through a few of the questions that were asked and some answers. So there were questions around the Japanese investment. and as you know that Warren had invested in 5 trading houses of Japan, and there was a question on, hey, what's your opinion around that? He says in the next 50 years, we won't even give a thought to selling any of those. And I think Warren did mention that if there was a choice to invest $100 billion, we would have invested in. And again, Warren doesn't want to go and do hostile takeovers. He will go and talk to, uh, you know, the companies that you want to invest in. And I think they'll be okay if you only take so much portion of their equity. And Warren says so. I think they had invested about $20 billion in each, or maybe five. I forgot the number. But he did make a comment saying if we were given a choice to invest $100 billion, we could have invested $100 billion across 5 companies. And he said we don't want to sell for next 50 years. We just want to hold it. It's a very long-term relationship. Questions obviously around the cash pile of $335 billion. And I said we would spend $100 billion tomorrow if I have a right opportunity. Right. But there are no great opportunities, that he would see where he can deploy the capital. Right. There was also a question asked that, hey, are you holding so much of a cash so that when Greg Abel takes over, whenever, he has a lot of cash available to deploy. And then so Warren says, I will not do anything so noble as to withhold investing myself, just so Greg could look good later on. I mean, the whole stadium was just burst out in laughter. And that old guy has a sense of humor. He still has a sense of humor. Questions around Geico. How the Geico turnaround has been happening. And if you are investing in insurance company, we'll know that Progressive Insurance has growing much faster than Geico, because Progressive has been making use of a lot of technology, new tech, using telemetry, etc., to price the risk. And Geico was kind of left behind in that. So there has been a overhaul of Geico that had been going around for a few years. So they moved Todd Combs, who was one of those, Todd and Ted, who are the folks that Warren hired to manage the investment side. So they moved Todd to Geico, and he had to do a cleanup. So I think they're cutting up on telematics. They were far behind. They improved their pricing model, cutting down on the jobs, etc. Impact of AI on insurance. So this is what Warren had to say. I won't trade everything that's developed in AI in the next 10 years for Ajit Jain. So Ajit Jain is the person that they hired, and Ajit Jain is leading the insurance business, whereas the Greg was leading all the non-insurance side, right? And little off track. When they hired Ajit had never had any experience with insurance companies. He actually is not from insurance company background, but they hired him. And he turned out to be, if you go and listen to Warren's, prior speeches, he said the best, he said that we have taken very few decisions, 12 decisions in total in his whole investing life of Berkshire, in which, that has made Berkshire what it is today. Out of 12, he says one of the decisions was to hire Ajit Jain. So Ajit has made a profound impact on Berkshire as a company. And it says, I'm not going to replace the AI of Ajit Jain. All right. Why he does not invest in real estate? There were the questions. Because he says in stocks, you can do billions of dollars of business totally anonymous in 5 minutes. Real estate deals take forever, endless negotiation, multiple parties, and then you don't even know, are you getting the right price or not, because there is no liquid market. At 94, he still prefers the simplicity of securities. There was a question of market volatility. If a 15% market drops make a difference to you, you need to have a different investment philosophy. Right? I think someone had asked earlier, what's good? I don't know. It depends on you. Right? If 10%, 15% drop in your portfolio makes you lose your sleep, then find another way to invest. The stock market may not be for you. or either the drop or the duration, right? Both things matter. Markets go up and down every time, and 5%, 10% drop is pretty common. We have had 20% drops in the last 3 years. That we had 20% drops in 5 years. Of course, it was 2022, then we got in 2020. So, but if 10, 15% makes you, all right. Okay. Let's talk about Tim Cook. This is how when he started the meeting. He says, "I'm embarrassed that the Tim Cook has made more money for Berkshire Hathaway than I have ever made." Right, and there were other. I think Tim Cook was there. I, and there were a few other, I guess. I think Mark Cuban was there. Arnold was there. Of course, we didn't, those they were in a segregated section, which was for VIPs. So I didn't get to meet any one of them, of course, but I know these guys were there. All right, so what we were talking about? Yeah. And then obviously they were talking about US currencies and, other things. So I did say that we don't want to, invest in a currency which get devalued and all that stuff. Devalue a currency is a scary thing, and we don't have a great system for beating that. Right, and then there was a talk about tariffs. Tariffs is, of course, an act of war. So, I mean, overall, it was a good good meeting. What else? So let's turn now to the market side and look at the overall market. This is like of this week. I don't know. If you really want to talk about something specific that bothered in the markets, bring it up. But I think over this week, generally we had almost no. Before that, I think there are some questions around Warren Buffett. So let me respond to those questions. Okay. Did you meet Tim Cook? No, I did not meet in person, but I did see him, from far away. Last question, best stocks to invest for the long term with great potentials. We will talk about a few stocks. I can tell you what some of the stocks that I own. This is our first meeting after the end of previous month. So I'll share what top 15 I have. Then you can decide what is best for you. Right? Again, Ravi, I think it is very important to understand yourself as an investor before we try to understand what the other stock is or the other company does. I have seen some of my friends try to invest in the stocks because the stocks were great, but they just could not hold through the volatility. And the stocks eventually turned out to be great, but they were out before the even stocks turned around, right? So they eventually ended up losing money because the temperament and the stock did not match. Right? If you are an income investor and you're trying to put in a growth companies, the stock will be great, but not good for you. On the other hand, if you're a growth guy and you try to put in a companies of, like SCSD dividend paying companies, you will be frustrated with it. So I don't know in terms of what kind of investor you are. You need to find out for yourself, what doesn't make, what bothers you when you're trying to invest, and then stay away from that. So great company, a great company for me may not be a great company for you. I do look at in terms of, what I want to see in the company that I invest in. And even if it doesn't pay dividend, I'm perfectly okay with it. But some people, they want to invest only in the companies that have net profits or have a dividends paying company, right? So I can't tell you what's the best company for you. We can talk about companies. I will bring up a few companies for while reviewing the earnings. If you like some of them and it matches your investing style, I think that will be the best for you. The best strategy, investing strategy, is the one that you can stick with it for a long period of time. A great stock, but you can only hold it for a year, has got no value You could better buy a moderate stock and hold it for next 10 years. It will give you much, much better returns. Sridhar, how is question get selected? Any idea? I don't know on which basis the Becky selects the questions, but when it comes to the booth, Warren will randomly go out, one after another, booth number 1, booth number 2. You can go and stand in a booth over there, and then when your cue come, you can ask the question. So what Warren will do is one question from Becky, one from booth. Which calculator did you use to decide if you're ready to call yourself financially independent and quit the job? For me, it was looking at, I've been doing it along with my job for 8 years. And then I look at, okay, this is my portfolio. I think I can get this much amount of a return. And what do I have? What's my expenses are, right? And then look at my savings, emergency savings, etc. And then I make a decision. I made a decision. I think I can survive and run my family based on my investment earnings. It doesn't mean I'm retired. It's not that I'm not doing anything. I'm probably spending more hours working than I used to do in my job. But it's, if you call as if you really enjoy what you do, it doesn't feel like a work. So that's the situation. But I spend at least 12 to 14 hours working on my investing stages, right? But it's much, that time, I enjoy doing that. So you have to determine what's your upcoming expenses are, how much you have, or what do you think you can get from market, right? What's the on average return in a long term you can get from market? Just don't look at your 2021 performance, or don't look at only 2023 and 2024 performance. If you only talk about these 2 years, these were not the normal years. You need to look through your performance on how you have done and how you felt going through those performance when it was 2022. How did you feel? 2018. And how did you do over there? And then you decide, are you ready or not? That's the exercise I went through. Do you get a question from Sridhar? Do you get a sense Warren became Coldfield because he's not having Charlie, who does a lot of work for him? Past to conference, I feel Warren confidence drop. I think Charlie was a person with whom Warren will bounce off a lot of ideas, right? And they worked together for almost 50 plus years, and now suddenly you don't have that partner. I think he does have a concern saying, who is gonna contradict? Because Charlie is a person who would immediately contradict Warren. I think no one else will be blunt enough in saying, it is BS. So number 2 is he does feel, the loneliness because now his friend is gone. And then if you are not in your best of mental health, you're not going to make the best decisions. And I think that's why, and I should have talked about it, I forgot. At the end of a meeting, he did announce that he will step down as a CEO of Berkshire Hathaway by end of this year. And no one knew. Greg Abel did not knew, or the board had no idea that Warren is going to announce it in this meeting. Well, that's exactly what he did, which is a good thing. Think, hey, if you think that you may not be able to carry on in the best of your ability, might as well step away. Vin, have you ever done a security back loan? How does it work? How much can I get? Each of the brokers will have a different percentage that they can give you. You need to talk to your broker. Have I done a security backed loan? Not really security backed, but I have had a cases wherein there's some trades that got assigned and I ended up negative cash, which is basically taking on margin. But if you really want to do it, you can get it done. You can loan your security to the brokerage firm, and then they can give you loan against it. I have not just done it. All right. Then all bots. Okay, Aditya, did Warren Buffett have anything to say about change in the world order and his faith in US economy going forward? So he did express some concern on how fickle our government has become in terms of taking decisions. and also said that we cannot expect to live in a world where 300 million people, which is US population, is doing great, and then we tell rest of 7.5 billion people, FO. So that's not going to happen. That's not the world that we want to be in. So he did express some concerns on America trying to extract value from the other 7.5 billion people. And he did say that it won't be a strategy that is long-term sustainable. But he also said that America is a land of revolutionary changes, right? And we have, from 1930s, that's when he was born, we have had many issues, many calamities, and we have, surmounted each one of them. So he does have a faith that we will be able to get through these. But currently, what we are telling to the rest of the world, that it's only America and else rest doesn't matter. He did express some concerns around that. So he did talk about maybe diversifying your outside America. But he did put his faith, saying we will get through this, as we have gone through, get over many of the issues over the last 100 years. Dev says Google, views on Google, Amazon, Microsoft earnings, views on rest of 2025. I have no idea what can happen in the rest of 2025. I don't have any crystal ball, but I'm not gonna move into cash. I will just hedge the portfolio based on what happens on a short-term basis. Long-term basis, I'll just buy the great companies and hold them. So what's going to happen in 2025? No idea. If I knew it, probably I'll be sitting on my own island, right? I don't have to come here and talk about investing. Anyway, so this week, just subdued. If you really look at, I don't think the markets moved much this week. We might have ended where we had started. Okay, I forgot to open Thinkorswim. So maybe we can, let's go to SPY. Oops, let's go to 1 year. Right, so what we started week at 5.2, came back where we started, right? No difference, hardly any movement for the week. Of course, we had some volatile days, but pretty much back to where we were. So pretty subdued. We had a resilient labor market. Gold was again, near all-time high, and then I also saw volatility in the oil space. I think the OPEC and OPEC Plus have making some tough decisions. At some part of a time, Saudi Arabia will say that they're gonna flood the market with oil if the other OPEC countries don't, behave themselves. Looks like some of those countries were producing more oil than their quotas, and maybe the last 2 days I saw oil inching higher. At some part of a time, it was less than $60 per barrel, but now coming back up. But not too much of a news. I would say the big news on the market was, hey, we're going to get a deal, right? Donald Trump teed up with saying we're going to get a deal with a big country. Then everyone realized that it's going to be UK. So we did announce a new trade deal on Thursday this week with UK, which has got 10% universal tariff, first $100,000 vehicle from UK will subject to 10%, beyond which at 25%, and then some few more things. Okay, but I don't think we care much about UK anyway. The amount of a trade that we do with UK is small. But what we do want to do, and what did this signal, was it signaled that US is, and willing to go and talk and sit across the table and negotiate, right? And at the end of the day, we all are looking for negotiation with China. That's the 800-pound gorilla that we have. And I know over this weekend, Scott Bessent and his counterpart in China, they are meeting in Geneva. I don't know what happened in the meeting. Has the meeting taken place or not? Will only the pleasantries be exchanged, or are they gonna actually talk about some trade deal? We don't know. But that's the case. Um, it's I think this whole stuff with the UK has got more value as a signal than whatever has been discussed in this trade deal. Right? Our trade with the UK is not big enough. What else we had? We also had a Fed commentary. FOMC, they had their meeting, and then, as always, after the meeting, Chairman Powell will come and then, go through his regular spiel, which is almost every meeting is almost the same thing, right? There's nothing new. It's more important is how he responds to the Q&A from reporters. Did he cough? Did he scratch his nose? Did he twiddle his thumb? Market moves based on that, right? So market is looking for any cues that Fed chairman can provide with respect to any rate cuts, what's the amount of rate cut, when the rate cut will happen, and Jerome has played this game. He's been playing this game for what 4 5 years. I think more than 5 years, and he doesn't give in anything, right? Nothing. So as of now, there is no change in the Fed rates. It is still 4.25 to 4.5%, kept the same. And what over the last 2 or 3 meetings, it's been the same, right? No changes. But what's the market started to look at, or probabilities that market is thinking? So I went to the Fed Watch tool, and we are looking at maybe in the July meeting, 50% probability that we might get 25 basis cut, 50% probability. And maybe then another in October, 40% probability as of today morning. We might get one more 25 basis points cut. That's what market is currently thinking, is maybe we'll get our first cut in July. Again, we don't know. It depends on Fed is always backward looking. They need to look at the data that is in the past to make a decision for a future. So there is always a conflict around, Fed is always late, and DJT is, calling names. It's in the calling Jerome Powell a loser, whatever. He wants Fed to cut rates, but I think it's okay. Fed doesn't need to, there shouldn't be any need for Fed to come and start interrupting in the markets as often as they've done in the past. We just get used. The market is somehow get used to the what should I say, to the drug that is induced by Fed, and that's not good for the markets. Come on, let the numbers play out. We are not seeing large scale layoffs. The labor market is still resilient, and the inflation is still above 2%. And these are the two mandates that Fed has. Fed doesn't have a mandate on where the stock market is going. Fed doesn't have a mandate on, what's the treasury rates are, or at what rate can government borrow loan. That's not under Fed's mandate. And both those things, labor market is strong, inflation above 2%. I agree, those are the numbers that we're looking in historical past, but that's the data that they have. Anything else is in future, and I think Jerome Powell has said many times, as he does it always after all the conference, if the number changes, we'll change our mind. So let's see what happens in June or July. Right now, market thinks that in July we'll get a rate cut. David is asking, how are you hedging the portfolio? I am hedging by just maintaining, looking at my overall deltas and then reduce the deltas by either do a covered call or do a call against QQQ or basically index ETFs, right? Just overall reducing the risk in the market. But it comes with a cost. If the markets rip higher, maybe I'll not perform as good as the market. But if the market stays, I'll probably not lose as good as market. So that's a cost when you're trying to run a hedging portfolio. But this is my only source of income, so I cannot go degen all the way, right? So I need to make sure I still can, run my day-to-day living. So I need to do some hedging, so I'll do it. So that's the way I'll hedge it. So I did talk about hedging and how you should look at your overall portfolio, pick up your beta weighted deltas, which or index you could use. So I did cover in one of the last year options boot camp, episode number 13. You can find it on my website. You can go and look at the recording of what's the thought process that I use to hedge my portfolio. All right, overall sector performance, discretionary and the tech trade are still challenged. I mean, discretion is down 12%, I think largely driven by companies like Tesla, which is a big market cap company. And Tesla is not done anything good here, right? TSLA. Oh, let's go to Google Finance. It'll give me YTD performance. Tesla is down 26% year to date. And then if you have such a big company, almost $1 trillion company, a big weight in the particular sector, and that's down 26%, it's going to drag the overall sector itself. Of course, the next one is the information technology sector. You look at Meta, look at I think Meta comes in communication services, which also itself is down like almost 4%. But Mag 7s are the lag 7s for this year. 2023 and 24, those are the Mag 7s. Those were the leading ones. But this year, these are the lag 7s. I think except, is Netflix on Mag 7? No, right? Except Netflix, I don't think there are a lot of other tech companies have done that great. And there are a few, but majority of them are still like year to date, the performance have not been that great. Let's look at a few. Microsoft was a year to date. It's up 4% last 1 year. Microsoft recovered a bit, I think, over the last a few days. Which else? Nvidia is down 13% year to date. Tesla, we already looked at. A fruit company, what is the fruit company? Fruit company is down 20%. This is the most valuable company in the world, and it's down 20%, dragging the rest of the sector with it. Let's look at the stock that has been marred by the whole judicial antitrust. That's down another 20%. So, but these stocks did great in 2023 and 2024. Now there's all been challenged. So if you see communication, information tech, and discretionary, all are still in red. What's worked this year are the safe sectors, utilities, consumer staples, industrials, financials, and real estate. Right? Utilities, consumer staples are safe sectors. When there is a uncertainty in the market like we have had since April 2, I think the market has started to correct even before that itself. But right now we have gone back. I think we recovered all the losses since the Liberation Day. But Liberation Day itself started with the markets was down for like maybe 5% or something. Fear and greed index is back in the greed zone. Look at the quick recovery that has happened on this. So I gotta be maybe a little careful on how you will approach in the market. So what did I buy or sell this week? Nothing. I didn't buy anything. I sold a little bit of a QQQ because I had a short call that I closed, and then just to have the similar delta, don't change my delta profile, sold some shares. And then IBIT covered call got assigned, and I'm not defending it. Now IBIT is the ETF based on it's a Bitcoin based ETF, and it's been one of a great instrument to just harvest the premium, right? But then there are some times like this we had wherein it's been ripping higher without any pause over the last 2 weeks. Then I had a covered call on it, and I'm like, let it be called away. I'm not going to defend it. So it was for May 9th expiration. So some shares of IBIT will get sold. So that's only two, I would say, the stock transactions that have happened this week. Nothing else. Again, don't go and sell your QQQ and IBIT. I just want to be a little transparent in terms of any stocks that I sell or I buy. Next week earnings, I think it's all the Asian week because Sea Limited, Tencent, JD.com, Alibaba, and Doximity. I think these are the 5 ones which I'm going to review because I hold all of these in my portfolio. But there are a few more that you may be interested. I know Rigetti is, it's a lot of retail investors' interest in Rigetti because, hey, anything related to quantum, guys, anything related to quantum, right? And I don't know why checks still exist in ChatGPT or Gemini area. This company will probably just die down. There's like one ChatGPT in November 2022 came and just upended the whole business model of Chat. So, but surprised to see that it still exists as a company. What else? Nu is a digital bank in Brazil, been growing like crazy, and I see some retail investors getting interested in this. Oklo also, the stock had done, I think, last year really well because of the demand for nuclear power. And when the stock goes high, the retail investors just get excited about it, right? Doesn't matter what the business is, but if you see a stock price going high, everyone wants to jump in. What else? Notes. CoreWeave, right? CoreWeave had its recent IPO. We'll be interested to see what they've done. I guess that's it. Kava is going to be the new, is the Chipotle of Mediterranean. We'll see. I guess that's it. Maybe I think NVIDIA is the one that reports very late. So otherwise, the big companies have already reported their earnings. They're already out. So maybe a week or two later, we'll be done with all the earnings. Anything else that you want me to look at for their earnings? Lyft. Does Lyft report earnings this week? I don't see Lyft name here. Oh, they did it last week. Okay. Well, I think one thing which I heard about Lyft was now they're planning to expand in international area, which is good. I think Lyft stock did well. I don't know what did they report, but I do recall that the stock jumped higher after their earnings. Oh, they acquired European company. Oh, so that's how they're getting into the international business. Okay, got it. I knew that they are expanding into international. So probably they acquired a company to move into that and did buyback. Why would they do buybacks? Gosh. Maybe they think that the stock is very undervalued. Where is Lyft? I don't own Lyft, but I did use Lyft in Omaha, and I think that I did tweet it out that the ride-hailing business, there is no loyalty. So earlier I used to have both Lyft and Uber on my phone. Then I switched my phone and did not download Lyft. I've been using only Uber for past 3 years or so. And then one of my friend who was there with me during the Berkshire, he says, you should try Lyft. I'm like, why? Okay, try it. Then I downloaded Lyft, and then Lyft was, $10-15 cheaper to me than Uber. I'm like, I'm calling Lyft, right? There's zero customer loyalty. The relationship that you have with Uber or Lyft is very transactional. Whichever company can haul my ass from one place to another at the cheapest price, I'm gonna move to that company. And then when I landed here back, then every time I'll check both on Lyft and Uber and see whichever is the cheapest one. So on my way from airport to home, Uber gave me better pricing than Lyft. I'm like, I'm gonna go with Uber, right? So right now the score is 1:1, but now I have a Lyft app on my phone, and I'm always gonna do the price comparison. There is zero customer loyalty. And that's the reason why I can't make Uber a big portion of my portfolio is there is no special brand attraction, or there is no brand that premium that Uber can command over any other competitor. It's just a game of low price. And don't get me wrong, in some cases, the low pricing, it's a moat for a businesses, right? If you can pull it off, it serves as a moat. But we'll have to see, if how long can Uber become the biggest player and they capture the whole market. That's great. But yeah, there is no loyalty. It's not that I have to go with Uber. I mean, I have to have my toothpaste. I'm not going to change it. Even if that brand becomes $1 more expensive, I'll probably still stick to that. With Uber, Lyft, I don't care. I'll go with whichever is the cheapest. And Aditya says Waymo next. Yeah, once the Waymo start serving our area, we'll jump onto Waymo. And that is why, I still hold Uber, but I can't make it a bigger portion of my portfolio just for this reason. And of course, the other reason is what's the economics will look like once we have a robot access, right? So I'll have to wait and see how the business perform then. All right. Where were we? Okay. Portfolio pizza. Again, I'll bring up then the end of a next month, but as if now this is the case. So someone had asked, what are the stocks? These are the stocks that I own, top 15 in my portfolio. This is easier, right? The end of March and end of April, nothing much has changed. I think the leadership is still the same. I don't think anything has moved out or moved in. Within the leaderboard, some positions have shifted. Like Palantir has moved up. Melly has become 7%. But overall, no change, I guess. All right, this is not as of 3:31. This is as of 4:30. If you have any question, I'll give you 30 seconds to look at it and ask any questions that you may have about my top 15. Otherwise, I'll share with you after the end of May. Jose, the advantage is which is easier to use, which car comes faster in the price. Exactly. Which is in other terms, you're talking about which has got the biggest economies of scale. Right? It is a commodity business. In a commodity business, there is no differentiation. Right? It's all the ones that win in the commodity business is the economies of scale. Which right now Uber is the biggest one. So I hold Uber stock. I don't hold Lyft stock. But at the end of the day, if someone can throw in a lot more money and bring up the same economies of scale, Uber could get disrupted. Jose is asking, what's the thesis behind your Mercado Libre position? I'll talk about Mercado Libre earnings, so we'll talk about that. Investment in India versus investment in US. So my investment, so let me put it the other way. My way of investing is I will invest in the company or country if I in a company if I understand the business. I do not have time to track and understand what's happening in Indian companies. Now, at a very macro level, so that's why I don't invest. I will not invest in individual companies in India. Now, at a macro level, should we invest in developing countries, which is like India, or you can add in another one, BRICS, or stay with the developed countries, or India has its own growth story, right? The Indian markets have done great over the last 5-10 years. India is a growth story. It's a hedge against China when it comes to moving a supply chain, etc. And should we move towards India? I have a INDA ETF that I use it. If that's the thesis, sure. But I've heard this developing country thesis for last 20 years, and still the best companies are still in US. So you got to be careful. This is not the first time that India is shining, or China's got a huge consumer population. Everyone is going to China, more like except the last 2 years. So yes, everyone is like China is so great, right? Consumer population. India is so great. The largest middle class population, the working age, the number of people in the working age category is the biggest in the world, and all that. The stories are not new. Maybe the execution will be different this time because many companies are de-risking and moving their supply chain out of China. India could be beneficiary of those as a stable government for the last 10 years, could be beneficial for those. But then, yeah. So I get my exposure through INDA because I do not have time to follow individual companies. And because I do not know what's happening on day-to-day basis, India is too difficult to follow up. And that's why I'm not going to make that as a bigger portion than what my US portfolio is. Vinay says, looking at a portfolio seem to be more of a growth investor. Is that correct? I don't bucket myself growth or value. I call myself as a rational investor. I don't. I have a Palantir, but I like the business, don't like the stock price. I mean, I sold more than half of my portfolio on Palantir, but it still become a bigger one. So if I like the company, I'll own it. Like Berkshire Hathaway is number 10. Right? So I call myself as a rational investor. I'm not going to go and buy growth at any price. We've all done those mistakes. Also, I'm not going to go and buy which find as a P of less than 1 or whatever, looking at the cheapest possible P stocks. If I understand the business, and if the business has got a mode in it, probably can grow in future, I'll buy it. I'm okay to pay more for a business that can grow. Right? The typical value investing will be you're buying a business at a price at which it is lower than its value. So when it matches its value, then you should sell. I won't do that. If I find a business that is lower than its value, and I will hold it because of the business could grow further, and I want to find those businesses that grow further. Otherwise, every time the stock price matches the value of the business, I have to sell the stock and now go and hunt for another business which is undervalued. Too much of a work. Right. But I look at the valuation metrics too. I'm not blindly buying. I did not buy Snowflake at 80 times sales. Right? I'm not bought Palantir at once it was above. I think my last purchase on Palantir was $26. Right? After that, I've been selling. So that's my investing style. Different people will have a different ones. So you have to figure out what works for you and stick to it. Don't copy or follow anyone else's style. All right. Oh, this one, a barbell distribution, right? Almost 68%. And this, I think, stays the same. 68% is my core, which is good, solid companies, profitable companies, good balance sheets, or the ETFs, right? And then the growth part is what, 27.6%, which are the companies that may not be profitable, but they're growing like crazy, right? And half of them just could go nowhere, right? I think on the core side of a portfolio, I don't think the company gonna go bankrupt. But growth side of a portfolio, maybe half of them will go to zero, right? And then finally, moonshot is like 4%. All of them could go to zero, right? But those are my gambling chips. I don't know how to gamble in the casino, but this is the casino. If you consider stock market as a casino, putting 4% in the casino should be okay, right? You'll still survive. So that's my 4% casino. All right. Now, next, after the end of May, I'll bring you the similar chart and we'll see if any leadership has changed. All right. Crypto, we already talked about it. So we don't have to talk about it. Crypto anymore, unless they want me to go into some specifics. Coinbase, I think yesterday launched Bitcoin futures trading 24/7. I don't know, why would someone want to do 24/7? I do know that the stablecoin bill that did not pass through the Senate, I guess, was it Senate or the House? So that's bad. I think lawmakers will get together and probably look at that, because that's something that we definitely need. If US wants to become the crypto, what to call the crypto king or whatever of the world, then we need to have those regulations in place. Unfortunately, the stablecoin bill, and I think both was the Genius Act or stablecoin. I get confused on which part of a Congress has got what bill, but one of them got defeated by 48-49 vote, and I think a couple of Republicans went and voted with the Democrats, and that's how it got defeated. But anyway, I think we'll take time. It's these are the new stuff, so I'm not surprised about it. Ethereum, some overall already happening in Ethereum. Some companies are accepting Bitcoin payments, and Metaplanet is like MicroStrategy of Japan. They just buy Bitcoin and hold it. And there is a conference happening, Bitcoin for Corporations, wherein the god of Bitcoin, which is Michael Saylor, has now become for the corporations or for retail investors. He's basically sharing his playbook on why the corporations should hold Bitcoin on their balance sheet. So there's some conference going on. And there was a bank of a BIS, which is Bank of International Settlements. This is called the banks of the banker to the central banks, right? And it reports suggest that a Bitcoin use surges in economic stress, which is what the use case is, that it is non-government controlled store of value. So if you have a stress in your government controlled fiat currency, you will move to something else which is not controlled by government, and government can't devalue your holdings, right? We don't feel the pain in US, but you meet someone who is in like developing countries like maybe Egypt, right? Egypt did a devaluation maybe twice this year. Or Nigeria or Kenya, some of these countries whose currencies are not stable, you will suddenly one day you get up and suddenly you realize that the value of what you hold has been cut down in half, right? Because government suddenly devalued its currency. And they have to do it because governments don't manage their house well. And then the rest of the world will say, why should I pay you this? Or why should I loan you this? So government has to devalue their currency. And that means as an individual investor or the owner, whatever you earned by, spending your time and labor, that value is cut into half. So in those economic stress, you would want to move out to something which is more stable value. A lot of these countries they have a flourishing black market of US dollars because they have a faith in US dollars. I mean, comparatively, right? I know our new administration is doing crazy stuff, but comparatively, the rest of the world still thinks that US dollar is stabler than, Venezuela Bolivar, right? Or Egyptian pounds, right? Or Nigerian naira or Italian lira. We're still better than those. So they would want to hold dollars or gold or the new digital gold, which is Bitcoin, because it's easy to transfer in. All right, so that's on the crypto side. Maybe another 30 minutes and we can go through some earnings. That's the last topic for today, is going through some of the earnings report. Vinay is asking, typically what percent do you hold in cash, right? So typically I want to hold around 5% in cash, but this month, and I think I think it is only in this month, I am very low in cash because I had a short put that got assigned to me. And I decided that, and that was during this whole market mayhem that we had in April, right? And the cash got taken out from my account. So it did reduce my cash, but then I deliberately took a decision to stay with the low cash and hold the stock basically, and then sell premium against it. So right now I am low on cash, but that's very deliberate. Otherwise, 5 to 10% is range that I've held previously. Number two is, over the last 1 year, the cash portion has come down because cash doesn't earn anything. When I was working, I used to have a higher portion of a cash because I'm still getting some income coming from my job, right? So if one of the portion of my investment is not doing anything for me, it's okay. I become a little more aggressive in utilization of a cash, uh, because it's like an employee that's is available to me. Now I have to decide how much I need to have on sitting on a bench and not earning anything, versus putting to productive use, right? And there are pros and cons. You have to decide what works for you, because if you have good amount of cash and you get a 10%, 15% market correction, that's an opportunity, right? The availability of cash becomes an opportunity. If you're leveraged, have no cash, and then the market falls on 10%, that's a disaster. It's the same stuff. Market has fallen down 10%. Depending on how you have constructed your portfolio, it could be a disaster or it could be an opportunity. So so I decide based on what my needs are and how much of a cash I'm willing to hold. Last 1.5 year, I'm willing to hold less cash because I need it to generate returns for me. If I had another source of income, regular source of income, maybe I will not be so aggressive in deploying, etc. But I also becoming a little more aggressive in hedging the portfolio so that I don't go through the huge wild swings. But that's how I manage myself. David, does it seem that Bitcoin value is growing as these companies continue to invest? For example, this week there was some small cap that invested in crypto like ASST. I don't know what this ASST is. Asset equity. Many companies are trying to just ride the wave of Bitcoin. Yeah, treasury adoption, Jose mentioned, right? Treasury adoption is going, and if more and more companies continue to invest, and there have been studies done, right? And you can always come and say, oh, there was ulterior motive, but the ARK Investors done a study, looked at I don't say that they have done it for the small companies, but maybe S&P 500, gone back and looked at how much of investment that they have in the US treasuries, right? And then they looked at various percentages, have 2% in Bitcoin or have 5% in Bitcoin, ran it through your Monte Carlo simulations. What they found was the ideal percent is 5%. If you had a 5% allocation to your Bitcoin and keep rest in your whatever the current T-bills, the overall value across the different cycles would be much better if with 5% allocation to Bitcoin. So that's a pitch for the the Bitcoin messiahs or the Bitcoin OGs to the rest of the corporates. Right? Are they going to jump on it? Who knows? MicroStrategy is all in into this, right? Some companies like Tesla bought $1 billion and they're sitting on that one. Then there are some Bitcoin, the crypto companies, they just hold Bitcoin on their balance sheet. There are miners who will mine it and then hold it on a balance sheet. There are other companies like MetaPlanet. I think there is a company in India also. I was surprised to see that some Indian company has also started holding Bitcoin on their balance sheet. I thought Indian government was against it. But anyway, so yeah, and if we see more and more adoption, and this will start to get into your retirement accounts, then the value should go high. Vinay, as an FII, I have held some part of my cash in GLD, but may not be practical now because of high price of GLD. I do have GLD in my portfolio, but despite, I have a digital gold as well as a little bit of physical gold also, but it's not in top 15. Also, they're saying, okay, past 5 days. So this is coming because nowadays many companies would just invest in because, hey, if you hold some Bitcoin on your balance sheet, it suddenly increase the value of your stock. Not that much, but these are like a pump and dumps that will happen. So I would stay away from the companies that are investing in Bitcoin just to shore up their, I would say, stock prices. It doesn't make any material change in the business of the company, right? Only thing it does is now they have something on the balance sheet, which if in the future increases value, will increase the overall asset value, right? Other than that, there's nothing much. But, it's an open market. People will go, and if you tell them that it's a $20 bill you put in an envelope and people are willing to bid $50, you can't stop them. You have to decide whether you want to pay $50 for a $20 bill in an envelope. It's up to you. So, and when there's a euphoria, everything goes up. All right, so let's talk about some earnings. So I do have with Jubia, Mercado Libre, Coupang. So I don't think this is a lot people are interested in this one. So I will talk about Mercado Libre, Coupang. Let me put it this way. You tell me which ones you want me to focus on. Oops, I have a lot more. Plus, I just did today morning, I just did a Uber just before this meeting. So, okay. Tell me which ones you want me to go through first. I will go through Mercado Libre because there was a question on that. Anything else? That's all we have for today. We got 20 more minutes. Use it or lose it. Meta. Coupang. All right, we'll do 3 earnings. Then maybe we move into a breakout sessions. I forgot about that. Right? I think our breakout rooms are still there. Right? Yes. And then we can talk, for longer on the breakout room. Okay, so let's start with Mercado Libre. Anyone needs the introduction to the company? Because I've been shareholder of this company for 5 years, and I've talked about it, I guess, or at least for the last 2 years, I've talked about it after every quarter. Right? So let's see. Oops, Melly. Okay, so let me just bring up Mercado Libre. So Mercado Libre is a e-commerce platform in Latin America. It is it becomes easier if you give a reference to the US companies, right? Hey, it's a Tesla of China. Similarly, Mercado Libre is Amazon plus PayPal plus eBay of Latin America. Okay. So that's in a simplistic term. The biggest business is their e-commerce business, just like Amazon has, and has the same business model. Amazon has got Amazon Prime, Mercado Libre has got MLI Plus. What they do have on top of Amazon is their payment systems, right? Which Amazon does not have, which is called Mercado Pago. And then, of course, they have other business which is called Mercado Credito, which means they're also offering loans to merchants. They're offering credit cards to merchants as well as consumers. Then they got a Mercado Envios, which is their logistics business, in which basically use their own logistics to ship the goods. Plus, they also, that business is not too big. A third party using Mercado Envios to do that. And they also have Mercado Fondo, which is more around investing opportunities, buying insurance, buying mutual funds, etc. Again, very small part of a business. Majority of the value that Mercado Libre has is from their e-commerce and from their payment system. So I'll focus on only these two stuff, right? So, but it's a great business. I mean, the stock price has gone at multiple places. As if we look at, over the last 5 years, right? 2020, some point of time it hit close to $2,000. Then it got crushed as close to $700, right? And then since 2022 have been, in the right, going towards right up. Of course, it has got its own volatility, right? And again, if you're investing in any company which is outside US, even if the company is doing fine, it will just get impacted by what's happening with the US dollar because of the Forex issues, right? And it does happen. So when you're reviewing these companies, I also look at what's a constant currency or Forex neutral business performance, right? Companies don't have a control on what the dollar is worth, right? Yeah, they could have hedged their Forex risk, but these are not hedge funds. These are the guys who are running an e-commerce business. So I want to value them based on how well their business operations are. Okay. And, when market goes crazy, it also gives you an opportunity to buy it when everyone else sometimes puke on it. Very recently, we got that opportunity, I think it was previous quarter or maybe prior to that, wherein they said, hey, we're going to build 11 warehouses in Brazil. And hence we're doing that investment. And hence their, earnings for that quarter were low. Market puked on it. It was punished close to $1,700. And I think I did tweet about it. I'm like, for me, that correction is an opportunity. So I added a little bit more to my portfolio. Right? But so let's look at it as a business. And where were we? Okay. So overall revenue is up 37%. It is almost 25-year-old company, right? And still growing at 37%. Gross margin up 36%. Gross profit up 36%. Operating income up 44%. Net income up 43%. I mean, year over year, there's nothing to dislike here, right? They beat both on revenue as well as on net income, right? I'm more focused on the operating income because in some kind of a businesses, your net income and operating income could vary a lot depending on what other stuff the company has, like Palantir. Lot of net income of Palantir is being boosted by the interest income that they're earning by parking the cash. And that is not in their control. They don't control what interest they're going to earn. That's controlled by Fed. What if Fed try to cut the interest rates? Then that portion of income will go down. So I tend to focus on what's their operating income. In this case, pretty good, right? Revenue of 37%, operating income is of 44%. Start to see this operating leverage in the business. Now, business metrics, gross merchandise volume is up 17%. And again, I want to focus on this is the TPV and TPN, which is their payment, total payment volume, total payment payments, like number of payments, are up close to 40%. And this is the credit portfolio in which they offer loans or credit cards. That's up like 75%. Recently, they added credit cards and they start to roll it out because they were finalizing their risk models. So they were going slow on credit cards. But I think going forward, they're going to be a little more aggressive, especially in a country like Argentina, where they don't have a credit cards yet. They're going to start selling the credit cards. It is important to understand, anyone can buy a revenue, but you got to not buy revenue means you sell the stuff for free, right? People will buy it for you, but that's not going to help you in the long term. So what I liked about the management was not going aggressively on day one, but go slow, try to fine tune your models to see if, are you able, to maintain the same level. I mean, are you able to run the business with the appropriate interest margin that you're expecting from it, right? If not, you tweak your model to see which customer should I offer credit card, which I should not offer credit card before you decide to go pay. Right? So happy to see credit portfolio up 75%, but not too much issues around the margin, right? You can always increase your revenue, but lose the margin. They have not lost too much. Items sold, which is again on the marketplace, the buyers are increasing. Asset under management, which is their fondo, right? You can buy mutual funds, etc. It's a small part of a business. And then net interest margin after losses down 8% to 22%, right? But I'm not bothered about it. Why? Because so they have a different loans, which is your personal loans as well as credit card loans as well as merchant loans. Now, the spread in the credit card loans is the lowest. Okay? Whereas on a personal loan and on your merchant's loan, the spread is higher. But if you're growing a credit card business at a much faster rate, then your net interest margin will across the company will come down. Right? So that's the reason why it has come down. So that doesn't bother me. But if you just look at a number without going through the details of it, you might get spooked out. And sometimes the algos does exactly the same. So if you see the algos, your operating income has come down, they'll sell off the stocks. But once you go through the earning transcript, like, why the operating income has come down? Oh, they are making these strategic investments. These are going to be beneficial in the future, right? And then you're going to go and buy it, right? So I'm not bothered about this. And bursting in no stock-based compensation this quarter, which I love it. US-based companies are always so dilutive, and this is not. Oh, I think already talked about Nimal. And AUM is growing crazy because it's able to offer, especially the consumers, financial consumers in Latin America, banks don't treat them well. And that is why the new bank that's announcing earnings this week, has done so great. That's why Melee is doing great because they give much higher yield to the consumers and the merchants than the banks would. And that's why they also see the AUM rising higher and not seeing too much of a degradation in the net income margins. Right? So, I'll hold it. I still like the company. It's performing well. This one probably I reviewed after Q1. So there's nothing to dislike it. I only wish I should have bought a lot more 5 years ago when it was like $350. But that's when I started. I reviewed this company and this looks to be a good company. And then you review it after every quarter or what's a moat? Great. The moat is the logistics, the infrastructure that they're building. Right? That's the moat that they have. Now, everything then stems from, if you're on Mercado Libre, that's where they got all their consumers done. Now, to help those consumers, they need to pay. Consumers need to pay, and not everyone in Latin America has got credit cards, right? So they came up with the Mercado Pago. which is their payment systems. Now that payment is growing like much faster than e-commerce. And not only that you use Mercado Pago to pay for your purchases on Mercado Libre, you actually use a Mercado Pago to go to, let's say, let me give you a comparison. Let's say you got an Amazon Pay. I mean, Amazon payment system has not gone anywhere. But let's say your Amazon Pay, which you use to pay it on Amazon.com, but you don't use it anywhere else. Mercado Pago, you can go to an offline store and pay. It's like became a PayPal anywhere, right? Not just online, but offline, not only on Mercado Libre property, but on other websites also. So that's the offline payment systems have started to grow, because now, you got your credit card, you got used to Mercado Pago, and then you're using it to pay for other merchants also. Now they're trying to build your financial life around that whole Mercado Pago relationship. Now they're getting into offering you loan, credit cards, investment opportunities, so on and so forth. So that's the mode that they've built. So it is Amazon of South America expanding into payments. Yes, that's why I said it is Amazon plus PayPal. Right now they're getting into advertising business. They don't talk about it. You have to dig deeper into the earning transcript to understand how much on the advertising, because those numbers or the metrics are not shared. But I have no doubt that in another 3-4 years, when the advertising revenue start to grow up, Mark will start to then talk about it. Oh, they got an advertising business as well. Right? Just like on Amazon. Mark did not talk about Amazon advertising when you and we were talking about it 3 years ago. And we said, keep an eye on Amazon advertising. It's going to be a bigger player, right? And now they're talking about it. Amazon advertising has become like $40 billion per year business. So again, I think they got a lot of, I would say, tailwinds and different businesses that they can expand to. What I also like about management is when you listen to them, they are not focused on just trying to drive up the stock price in a short term. If it is in a long-term benefit of a business, they will make the investments, even if that means that short term there is a tailwind to the stock price. And I sincerely hope that they do not split their stocks. And I know a lot of retail investors are saying, you should split your stock. It is like $2,500 stock. I sincerely hope that they do not split. Asif, great find conviction. Oh, thank you. Again, it was not my original find, right? But you listen to podcasts, you watch some YouTube videos, you get an idea, right? And the whole reason why, if you're in this meeting, the whole idea, maybe you should get an idea about the companies, then build your own conviction. So I heard about it in one of a podcasts. I'm like, Latin America company? Who gives an F about a Latin America company? But then I heard it again. I need to go and study it, right? So you don't have to be original originator of the idea. But if you hear about something, then you need to put your own conviction. And that's what I did it over the years. And now it has become the biggest individual company in my portfolio. All right, let's go to the Coupang, CPNG, CPNG. Almost, now you might be able to see some theme across this, right? So Coupang is also called Amazon of South Korea, right? But it is better in terms of quicker delivery on South Korea. The big difference in between the Korean and the US market is Korean market is very dense, right? And so they are able to deliver. They have something called a rocket delivery, which means if you order an item before midnight, it could be 11:59 p.m. It will be at your doorstep before 7 a.m. Right? So it's like a overnight they'll be able to deliver. It's called, and they also have the same playbook like Amazon. They have Amazon got Amazon Prime. They have got a WOW membership. And then they have a Coupang Eats. Recently, they expanded into Eats and the Play, which is for games. I don't know why they're doing Play, but they probably are finding that some users they do want to engage in playing games when they're on the coupons app. Who cares? But again, this is the biggest e-commerce player in South Korea. The second one is equivalent to Google of South Korea, which is called Naver. But they have a search engine and it's like a Google Shopping, right? But this is completely focused on e-commerce. So revenue was up 11%, a slight miss from what analysts were expecting. Gross profit up. I'll not go through the numbers, but a few things that you need to focus on. Operating cash flow was down, for 335 million, but there was a reason in terms of why it was down. It has nothing to do with on the business performance for this quarter. Right? Free cash flow was a $1 billion, again for the same reason, so I didn't have to freak out. Stock dilution is only 1.2%. Right? It's a small company. It's a company came IPO maybe 5 years ago, maybe 6 years ago, and not been around for so long. It's 1.2%, which as an investor, I feel much better. I've seen 6%, 7% horrible stock dilutions. Same things apply here. If you're dealing with not US company, you should look at constant currency numbers. So if I look at that, revenue is up 21%, gross profit is up 31%. Business related metrics all look good to me. Right? So they have a product commerce, which is their Coupang e-commerce website, and the developing offerings are the offerings they call it developing offerings because they have not yet matured, like Coupang Eats. Like now they're expanding into Taiwan. So the Taiwan comes under the developing offering. Their food delivery comes under developing offering. Their Play comes under developing offering. So these are the newer segments. They will still lose money in this one because they're still trying to grow it. But the product commerce is their mainstay of their business. Right? So looking at a constant currency, I think things are doing good. And then they're also repurchasing $1 billion worth of a stock. It's a fun to listen to the management and how focused, or at least at least they talk about how focused they are in terms of creating shareholder value for the long term. And again, similar theme I see on Mercado Libre, similar theme I see on the management. So it is very important that you are in sync with the management, right? Whoever is running the company. Now, some of these comments from management is number of customers purchasing 9 or more categories have grown 25% in this quarter. So which means deeper customer engagement. They also launched their membership in Taiwan this year. Like Taiwan is a new market for them. They're focused on delivering long-term adjusted EBIT of 10%. And FLC is their delivered by Amazon, right? This is their freight and logistics business, which means the merchants can use their FLC and then deliver to the customers directly. This is growing like crazy. They haven't shared the breakup of the numbers yet. Tariffs, not a meaningful impact on tariffs. And when it is the first time that the board has approved $1 billion of share buyback. So there were a lot of questions on the earnings call on when are you going to do that? And how much you're going to do it? And their answer plain simple. When we find an opportunity that the market is sold of our stock at much less than what we think is a value, we'll do it. There is no set plan for it. Right. And again, Baum came a Stanford grad. I'm not sure if he finished his education. Did he dropped off from Stanford? But good pedigree, went back to Korea and started Coupang. So I still like it, but it will have its, challenges when it comes to about the competition. Naver is the closest competition to them. I think all other players are very far away, but Endeavor is very well capitalized because they have a search business through which they generate a lot of revenue. So I do want to keep an eye on how much is the overall market does Coupang has. Number two is currency fluctuation, right? So this year, Korean won had depreciated against US. So all the numbers on the US term, when you convert to US, will look bad. But otherwise, I think execution perspective, still good management. More importantly, that yeah, I like the management. So that's Coupang. I had one more, and then we'll jump onto the breakout rooms. Which one you want to do? Oh, I missed that where that was. Maybe then I'll pick. Let's do the hot favorite. Right? How can, as a retail investor, we don't know about Palantir? Right? The whole media is on Palantir. And all right, so Palantir. Many people don't even know what the company does. It does some fugazi, does some great stuff, but the stock is on fire, right? If you look at Palantir, I always say I like the business, but I don't like the stock. I mean, I like the stock when it was 2023, when it was $6, $7, right? This was a great time to buy. I think bought it all the way till 24, 26. And after that, I'm like, okay, it's too much, right? So let's look at its earnings and what is causing such a huge increase in the price. So revenue up almost 40%, which was a beat. The beat on both revenue. Did they beat on? Where's my net income? Okay. Oh, so the beat on revenue and then the adjusted net income, right? And operating income was up 117%, but the margins is now 20%, right? So remember, this is a company that claims to utilize and implement AI for their customers to improve the businesses. So it's a software company. Right? Of course, the history of the company is it started with helping and working with governments. I did not like it. I wanted to invest in it once their commercial revenue start to grow up, which we did start to see in 2022. 2023, the commercial revenue started to grow up. That made me interested in the company. And this quarter was pretty good, right? What I don't like is share outstanding, right? 6% dilution. Are you crazy? You're a $300 billion company, I guess. Or yeah, almost $300 billion company. And you're diluting your shareholders by 6%. Management can come and say, this is much better. And I agree. Earlier, the dilution was 12%, 20%, right? I hate such a big dilution. Anyway, from a business perspective, I think all the numbers will look good. I have no concerns on the business, right? Numbers are great. Commercial revenue up 33%. Government revenue is even faster at almost 50%. Billings are up 45%. The number of customers is growing at 40%. Commercial customers are growing at 40%. There is nothing wrong in the business, right? And they also did a guidance which was better than what the street was expecting. But the stock was down 13%. Why? Everything is good. I mean, any Palantir shareholders here? Anyone holds Palantir? Come on, don't be ashamed. It's okay. I hold Palantir. Morris is Palantir shareholder, right? Ramka says only trades option on Palantir. Oh, options are very rich on Palantir. Yeah, so the stock was ridiculously priced. This is one of the stock which I say, right? I don't want to sell the stock if it is expensive. I don't want to sell the stock if it is over expensive, but sometimes it could become egregiously over expensive. That's when I start to, okay, something need to be done. Palantir was egregiously over expensive. I still feel today it is at 117. I think it's still egregiously over expensive. But it's got so much of a retail crowd behind it that, if you try to short the stock, not gonna work out. You're gonna get run over by the Palantir bulls, right? That's not gonna happen. What do you think it's worth? I'm not run into the valuation yet, but I think I'll be okay to pay close to $60, 60, 65. Anything beyond that is basically depending on the foolishness of others. Based on the recent quarter, I'm telling you, 65, yeah, I'll be willing to buy. It will not be cheap. It will not be fairly valued at 65. It will still be expensive at 65, but I think I'll be okay to buy it. I'm not sure if you will ever find Palantir to be normally priced. The retail crowd will always push it higher. So you have to determine your price point of, when do I want to get in? Do I want to get in? This is my fair price, but you may never get the fair price. Do I want to get in here because it could go here? You have to decide how much of a gap you want to get. 117, no chance. Right? $100, no chance. 19, no chance. Goes to 60, maybe I'll start, building position again. So I think I've sold half of my Palantir already. And then I have covered calls against it, which is like at probably the net selling price will be 105 or something. I will probably not defend it. Let it be called away. And you'll probably get another opportunity. If not, I'll not regret the decision. I'll still will have a little bit, maybe 20% of my original portfolio. I'll still hold it just to have a casino, right? You need that. You need that casino shot. But other than that, I mean, it's super expensive. So from a business side, no issues. What you also want to look at is, I read through the shareholder letter. The writings are, the way the Alex Cobb writes. If you read his letter, he looked to be a deeply passionate about what Palantir is building, and he is absolute patriot, right? No doubt about it. Shareholder dilution, like I mentioned, it is still a huge concern to me. Why they continue to dilute their shareholders to raise money, not money, but basically they have to pay their employees, right? And so that's a concern. Operating margin is below 20%. I mean, it used to be 10, 11%, right? If you claim to be a software company, right? If you look at the margins of a good software company, it will be 30% plus operating margins. That doesn't look to be a software company, right? And then the commercial revenue as a percent total revenue has stagnated. I mean, my thesis was, if you are only dependent on the government, you don't have pricing power. And then you have 195 countries in the world. You have only 195 customers. I want you to get into commercial, which they did. But now the commercial revenue is like stagnated at between 40 to 45% over the last, I would say, 7 quarters. I want to see that going higher. Other thing I don't like is fake rule of 40. So Alex will come and say, we are at a rule score of 83 on rule of 40. Come on. You changed what the rule of 40 actually means in the real world. What their rule of 40 is a twisted version. It's their own creation of rule of 40. And then on that, you can come out to be 83. I don't care. Go with the rule of 40. What's the industry standard rule of 40? And then tell me what your score is, right? But I don't like that. Other one is net income is held by interest on deposits, right? Because I think they have what, $4 or $5 billion. Let's look at Palantir. How much of the cash? I think they have $5 or $6 billion on cash. $5.4 billion of cash, right? $5.4 billion of cash, you put it in 4.5% treasuries, that's gonna give you what, 200 million, right? And that's helped their net income. Let's see what the net income is. $214 million. Guys, show me that you can get it through your operations. What if the Fed reduces the interest rates? What happens to that, right? I'm a long on business, but I'm not a fan of a stock price, I would say. So that's Palantir. Thoughts on Google diving close to 10% in last few days? It's all judicial, the antitrust overhang. Like you gotta be, and then there was news around Apple is gonna create an AI-based search. Apple wants to create its own AI-based search. So the $20 billion Google used to pay $20 billion to Apple to be a default search on iPhones, etc. That business will go away. So that's going to impact the search, the revenue from search. So I think that's a concern. And what if regulators are trying to break it up? I mean, break up the YouTube, make it as a separate business. It's much bigger as a separate business than on under Google. I would want Justice Department to break YouTube. Don't break the search, please. Don't break the search and Chrome, break YouTube. So Jose said, I don't think there is a breakup thread with the new FTC. We also thought that, but they're still proceeding with their case against Google. And judge has already found Google twice, culprit on monopoly, on the search as well as on the advertising side. That they sit on both on the buy side as well as the sell side platform of advertising. So judge has already ruled that they are anti-monopoly, or anti-competitive. Anyway, so that brings us to the end of our standard session. Now I can hang around for another 30 minutes. If you guys still have a stamina to talk about investing, etc., I'll open up the breakup rooms.